What kind of insurance policy is best for infinite banking or bank on yourself strategies? Welcome back to my channel, where I am doing a series of videos helping you understand a little bit more about infinite banking and how you could potentially use it to enhance the strategies that you're already doing. In my opinion, there are really two main choices for an infinite banking or bank on yourself policy: whole life insurance, index universal life insurance. Both of these policies need to be structured the proper way, meaning both policies for infinite banking or bank on yourself strategies need to be structured to have minimum death benefit, or in other words, as low as the death benefit can go. And then they need to be overfunded with paid up additions on whole life, or just pure overfunding for index universal life. Now, assuming that both policies have been structured properly, which one is going to be better for the infinite banking concept? Here are the pros and the cons of index universal life and whole life insurance. With an indexed universal life insurance policy, or in other words, an IUL, you have the ability to capture the upsides of the market without participating in the downsides of the market. The way that this works is that the insurance policy is tied to a particular index in the stock market. If that index goes negative, there's a floor on your policy at 0%, sometimes 1%. If the index goes positive, let's say it goes positive 15%, your upside is going to be capped because you have that floor. So it may be capped at like 11%. So if the index goes up 15%, you're going to capture 11% inside of your policy. Now, with all of this being said, it's important to understand the role of this policy inside of an infinite banking or bank on yourself strategy. When you take a loan from an index universal life policy, what's happening is you're going to pay an interest rate and you're going to continue earning based off of the index in the stock market. So let's say that the interest rate that you're paying is 5% and the index goes positive for the year. And let's say you hit your cap and earn 10% in the policy. You paid 5% interest and you earn 10% in your policy, and you're able to take that loan and invest it in another asset outside of the policy. Sounds like a great deal. Well, on the reverse side of things, let's say you have a 5% interest rate and the index goes negative for the year. You're still going to hit your floor at 0%, but now you have to pay 5% on the interest and you earn nothing in your policy, which can create a negative arbitrage scenario, which a lot of people don't love. Whole life insurance, on the other hand, provides a lot of predictability and guarantees on the policy itself. You know exactly how the policy is going to perform, whether you have a loan outstanding or not. You will continue earning roughly 5 to 6% every year, regardless of what's happening in the stock market and regardless of what's happening in the investments that you're making. Because most of the people that I'm working with are taking loans from these policies and investing in deals, those deals are going to be the ones that are making the higher returns. So they don't really care about capturing the upsides of the market in the IUL because they're already capturing returns inside of their alternative assets. Because of this, 95% of the people that I work with prefer whole life insurance over index universal life insurance for an infinite banking or bank on yourself strategy. Now, personally, I have both policies, and I do prefer my whole life insurance policies anytime I take a loan out to invest. With that being said, index universal life insurance can absolutely be used in an infinite banking or bank on yourself strategy. You just want to make sure you understand the pros and the cons of having loan outstanding on your policy and what the index does in the stock market. If you found this video helpful, make sure and give it a thumbs up and subscribe to my channel. Turn on the notification bell so you don't miss another video. And if you have any questions or comments, make sure to drop them in the comment section below, and we will see you on the next video.